Hey everyone, it's Evan here from the Trade Risk on Tuesday, December 27th with a market recap video. Usually do these on the weekend, missed this weekend due to the holidays, so I'm going to start off the week with a little market recap. We're going to cover the usual current market environment, major markets, sector analysis, and then a few individual names. Probably be a little bit briefer today. End of the year, kind of winding down. Everybody's kind of kicking the can, waiting to see what happens next year. At least maybe that's just my thought process. But let's take a look at the markets today. S&P 500 closed higher on the day, up about 0.25%. It was up higher earlier in the day. We did get a bit of a fade off the highs, but still it was progress. This is the SPY ETF. Keep in mind, this chart is still a bit skewed here due to the dividend, the ex-dividend that kicked off, I think, 2 weeks ago now, week and a half ago. So if we go to the cash market, you can see a little bit of a different picture here. Same sideways consolidation for the past 2 weeks, but you can see today we got back up to those prior highs, ran into those highs, which is proving to be resistance at this point. And you can see we backed off again off of those highs of the day still. So trend is higher, momentum doesn't really exist. We're still kind of grinding sideways. It's trying to pick back up today on the upside. We'll have to see if we can get through these highs to sort of get that technical breakout and perhaps a new surge as we start to lift to new all-time high prices. But for now, it's a bullish consolidation within a trend, and we're looking to see which way this is going to resolve. Potential bullish consolidation within a trend, and we're looking to see which way this will resolve. That's the big picture. That is what we're looking at, and really not worth sort of overanalyzing this any more than it has to be. 8 and 20 are still up. Breadth today was pretty supportive. It was more bullish at the beginning of the day, but we did see a nice little pickup there in net stocks hitting new 52-week highs, and advanced decline line closed in sort of moderately positive territory today. So breadth fairly constructive, price testing highs. Let's see if we get a breakout here into the end of the year. Remember, only 3 trading days left now, so let's see how that all shakes out. If we go to the IWM, very similar situation, range bound, not quite at prior highs just yet, kind of in the midpoint of this range, above the 8 and 20, no real momentum, but trend is bullish, and we're just about 1% or less from all-time highs. So still a very constructive looking market here. The Qs tried to lead us higher today, set new intraday highs. Actually, I think might have been all-time highs if we were to go all the way back here from the .com era, 107.50. Did I just read that right? Anyhow, perhaps all-time highs there, not significant. We can always look back at that later. But certainly tried to clear these recent highs here, and did make a new closing high. If we were to look at the composite, it looks like we got a new all-time closing high here as well. So the NASDAQ setting a bit of a record here as it pushes higher. Notice the MACD, you're getting a little bit more momentum out of this index here and out of this group of stocks. So keep that in mind, but still a bit of a fade there off of the highs. So all in all, still a bullish scenario coming out of a potential consolidation, maybe a continuation pattern if we can start to get the S&P and then maybe the Russell through those highs. Then we're kind of off to the races, or at least grinding higher in that existing uptrend. So let's take a look at some other markets here, major markets, TLT. So we can see, we did have a gap down this morning, but bulls did kind of step in here and buy this up intraday, close near the highs. Still, a technically damaged chart. We've talked about this for quite some time as it's been in this strong downtrend. MACD is diverging positively, so it is in that early stages of trying to find a bottom, trying to find a low, trying to bounce and stabilize. For me, not too interesting. For mean reversion strategies or longer term hold, snapback, what have you, I could see this being at an interesting spot, but for now I don't have any other insight into this except for giving it more time. That's the way I look at a chart like this. And gold and silver, very similar situations. Gold saw a bounce today. This one finished higher. TLT finished lower. Gold finished higher, up 60 basis points. Again, strong downtrend, a lot of technical damage recently, and trying to find its footing here, trying to stabilize. And silver silver, similar situation, closed even stronger today, up 1.5%, trying to hold on to the lows made from last Tuesday, the 20th of December. And again, below the 8 and 20, technical damage, downtrend, lower lows, lower highs, trying to find a bottom, stabilize, bounce, mean revert, what have you. Not too interesting to me, but again, depending on your strategy and time frame, might be a little more actionable, or a spot to take a position or scale into, or what have you. So that's the read there on gold, silver, TLT. If we go into oil, a little bit more interesting. This is something that I like to look at a little bit more. USO, we've talked about this, put out a blog post, and it's been in the recaps that this has been resilient here, hanging on to these highs, consolidating underneath resistance. And keep in mind, like we talked about last time, USO, a little bit more of a skewed, it loses precision being the ETF that tries to track the spot futures contract. So again, the futures, we are at or very close to all-time high, or not all-time highs, not quite, year-to-date highs in oil, WTI, Brent, crude oil. USO doesn't quite show that picture, makes it look like we have some stiff resistance here, but if you were to look at the futures contract, you'd see we're actually kind of hanging out and just grinding right above at near those highs. So USO up 1.5% today, looks good. 8 and 20, still positive alignment, and trend remains higher here. So I like USO. Looks like path of least resistance continues to be higher, and so does UNG. This thing keeps on trucking. We had this big kind of island reversal again in the ETF anyhow for UNG last week, and this has proved to be a nice pivot low to trade and buy into as we've continued to move higher, coming back into the December highs now. USO, UNG both have a lot of bullish momentum, or at least some signs of bullish momentum behind them, and both have at least trend support in the short to intermediate term. So both look good for higher prices there, USO, UNG. And finally, US dollar, let's take a look there. Just flatline today. You can see it's hanging out still near the highs above the 8 and 20. MACD starting to weaken a little bit, just tells you momentum's kind of coming in. It's waning a bit. Trend still remains strong. So we'll have to see, does this turn into another continuation pattern for higher prices, or does some type of trend reversal happen? That's the more unlikely scenario when you have trends that are established. So UUP just taking a break here and consolidating. So with that said, let's move into some of the sector analysis. A lot on the constructive side today, right? Semiconductors, new highs here, up 85 basis points. They continue to grind higher, and you can see took out all previous highs. Looks good here for semis. XLK, kind of similar situation, although a little bit more of a fade there off the highs. Looks more similar to the NASDAQ 100. XLK is still the sector that we are long. We've been long this for a few weeks now, so we continue to remain long this. Looks like it was a new closing high here, so that is constructive. We'll have to see if that fade gets any more traction to the downside into tomorrow's session. We wouldn't want to see that, at least not from our position. XLI continues to consolidate here, pretty healthy fashion. We did talk about this potential two-legged pullback that could happen. That's the lines drawn here. But for now, it looks like it's morphing into some of perhaps a bigger consolidation pattern. It's holding the 20 period, trying to hold on to the 8 period. So we'll have to see how if that can sort of step up into the rest of the week. If that XLI, if the industrials start to get going again, then of course, that's certainly going to help the S&P and the broad market as a whole. XLU continues to remain pretty resilient up here as well. I think we talked about this in last week's video. Remember, this has been in a pretty strong downtrend ever since coming off the highs in July, August of this year. But most recently, it seemed to have found a low, made a slightly higher low, and it's kind of hanging up here near resistance. This is typically where we see things roll over when you get back to these prior highs and prior kind of heavy supply. Certainly could still be the case, but it is staying pretty resilient here. So it'll be interesting to see if we're getting some type of trend change and kind of a breakout back to the upside. Maybe too early to call that, but for those of you who are interested, might be worth keeping an eye on XLU. And then finally, XLF still looks still doing its thing, just sideways, very sleepy right now, working off those strongly overbought conditions, and we'll have to see which way that ends up breaking in the days or weeks to come. On the downside, XLV, IBB, a little bit weaker today on a relative basis. XLV, you could see, tried to get going nicely in the morning, got that fade, got that nice kind of tail up there on the top end. IBB, this is a sector that we are long. We did lighten up a little bit today, but still holding about 60-70% of the position still on here. Got that reversal today, not ideal, but we're going to give it at least one more day on the long side here to try and prove itself. We basically want to see the majority of Friday's reversal hang in there. So far we did try and push up and failed. If we get follow through lower tomorrow, that would probably be enough to get me out of this position, but for now we're going to hang in there. XBI, equal weighted biotech ETF, you could see similar situation, tried to push up, kind of failed, closed on the lows, so we'll have to see if we get follow through tomorrow. Probably be enough once again to get me out of there. $60.25 had been prior support. Briefly we're below it Thursday, recovered it quickly Friday, so that's the key level that I'm watching, is that $60 and perhaps a quarter level on the XBI. So that's it for the sector analysis. Let's jump into some of the individual names. We'll start with Apple, which continues to grind higher. You can see just putting in a series of higher lows throughout its path, this little trail of higher lows. Above the 8 and 20, made new closing highs today off of these recent highs, and you get these October highs, which I believe are the year-to-date highs. Right above us, coming in at around 118 or so. So we'll have to see if we can start to hit that target, bump up and test that resistance sometime this week. Google, I continue to like Google a lot here. I like the formation. I like this little kind of flag. Had the strong move up in December, kind of pulling off of it now. Tried to get going today, didn't hold on to all of those gains. But if we can start to again lift above, today's high is 815. If we can break above there, I think that's a good mark to potentially, get long for this kind of pullback, breakout buy trade, and that could sort of work into the next week or two. Amazon holding support here at this $760 level. It's come down here and tested it multiple times in recent weeks. Probably don't want to see it come back down and test it again, but for now I think you get a decent line in the sand. I think we talked about this level as well in the recent past, 760 being pretty key here for the stock. Looks like it might be able to float higher if it can hold. Could be interesting there. Facebook, certainly the weakest there out of some of the bigger names. Facebook still below the 8 and 20, still below this perhaps trend line that you could draw this way here. Just not so interesting to me. There's better tech plays out there right now. I think it just is doing its time consolidating. We'll have to see what comes of it. Netflix looks good. It's coming into resistance right here. This one's been back and forth, one day up, one day down, one day sideways, so hasn't been a strong momentum trend to the upside. Coming into resistance, maybe be a little bit cautious here, but still, it's outperforming. It's doing what you want to do. It's close to these highs, getting to the top end of this range. So look for maybe a second day of strong kind of expansion in range. Maybe that'll change things, get you the chase that you may want to really see in a momentum kind of trend higher. But for now, Netflix challenging these highs here, new close. Looks good, but it's not enough for me to want to jump in right here at this point, given where we are. So we'll end it there. I hope you guys had a great holiday, great day off yesterday. Enjoyed Christmas holiday off. As always, thank you for watching, and I will talk to you soon. Thanks.